I'm thinking about airdrops such as Meteora, such as Monad, such as Pump, right? And I think there's like at least 5 more of the same caliber airdrops that are coming in the next couple of weeks to months.
Gun to your head, guys. Is the bull market over?
I think it's a Trump market.
Bitcoin going to 1 million is like one of the biggest guarantees that you have in the capital markets right now, because it's a finished product, it works.
I'm getting super weird calls from AI generated bots that ask me to move the conversation to like WhatsApp or any other chat app. And it's so insanely good that my grandpa and my grandma would fall for it.
GM, welcome back to the next roundtable. Gun to your head, guys. Is the bull market over?
I think it's a Trump market.
Yeah, I also don't think that it's necessarily over. But yeah, I mean, I think it was just, and I mentioned it last week already, there was just too much leverage in the market. And to be honest, actually, I think that's actually a very good sign, to be honest. Wipe out some of these over-leveraged positions. And I mean, it's like very similar to what we have seen in 2021 as well. We had these magnificent dips to the low in 2021 as well. I believe people tend to forget about that. They just remember FTX and Terra.
I would say there's a, I don't know, 3 to 5% chance the bull market is over, in the sense that everything is gradually going to go down over the next 10 to 20 months. But the thing why I don't think this is the case, and the reason why I'm slowly shifting towards the 4-year cycle being disrupted is Trump. I think Trump was such an uncontrolled event into the cycle dynamic that it skewed the entire thing up. I might be in denial, but I still think 95% the cycle isn't over. There's like so many catalysts coming and great apps being built. I mean, just today, totally pushed like a perps thing on GitHub for Solana out of the blue. So I don't know. There's like so many things happening, or at least, the sentiment between things that I see being built versus price action is completely unaligned, whatever that means.
Can I ask a follow-up question? So I recently watched an interview with Arthur Hayes, and it sounds a little bit, but what you're saying sounds very similar to what he said. He thinks we are in a Trump, like precisely like in a Trump cycle, and the bull run will for sure take as long as Trump's in office. That's what he said. So yeah, what do you think of that? And can you elaborate a little bit closer on the catalyst? Is it just that some of the major projects ship great stuff, or are you seeing something else as well?
I think the catalysts mainly, so I'm not aware or thinking of any macroeconomic QT versus QE shift type of catalyst. I'm more thinking about very practical things that are about to launch that will put money into people's hands. I'm thinking about airdrops such as Meteora, such as Monad, such as Pump, right? And I think there's like at least 5 more of the same caliber airdrops that are coming in the next couple of weeks to months. And on the one hand, like I don't really believe in airdrops all that much. I think the narrative is kind of dead, but they do have this dynamic of igniting some sort of like bull market in my mind. And if you remember like the Celestia airdrop, go back in the timeline, look at the Celestia airdrop. It pretty much lines up perfectly with the ignition of the current bull market, in my opinion. Whether it's coincidental or not, I have no idea. But in that sense, like those catalysts are coming. There's just a ton of things being built. I'm excited to use, and things being launched. All the like trading systems are getting more and more advanced. There's one I wanna talk about today later as well, which is like this LLM competition arena thing. But I don't know, like I think the price action just doesn't reflect what's going on. And I think even in the trenches, like, yes, everything is super down, but teams are building, teams are grinding, teams are shipping things, and it's just a matter of time, in my opinion.
Interesting. Max,
And I mean,
what are your thoughts?
yeah.
Sorry.
I still think that the bull market is not over. I'd give it a, let's say, 70%, 75% chance that we are still going to see higher. Market structure wise, it's definitely not looking great right now, just because you've wiped out a significant percentage of the capital that is willing to bid altcoins. So I think for Bitcoin, the thesis remains largely unchanged because it has evolved more towards being a macro-driven asset over the last 1 to 2 years. And all of these macro catalysts, they are still in place. Not a lot has changed over the past weeks and months. Currency devaluation of the US dollar is still going on. You have like all the geopolitical tensions still existing, all the BRICS nations, whatever, regulatory friendly stance in the US, like all the things that we've discussed more or less over the past 6 months have only increased the strength of the Bitcoin thesis. So I think that Bitcoin will weather the storm just fine. I also don't think that gold ripping so hard is a clear sign that the crypto bull market is over. I don't think it is worth being overly opinionated about it, but if you just look at it anecdotally over the past few instances, it's usually been the way that gold has been ripping on a rally upwards and Bitcoin has been lagging behind a bit. I mean, the number of observations is not as large as to make a like super statistically significant prediction or correlation there, but it's just like another variable I would keep in mind. We have nation states bidding this thing. Like I don't see Bitcoin being endangered in the long run. And even if we see a sustained downturn over the next couple of months, I think the Bitcoin reaching on par with gold in terms of market cap is still one of the most straightforward macro trades over the next 10 to 15 years. Allow yourself some flexibility in the time horizon there. But I think like everybody who is in our generation, it's a very obvious bet to make.
Yeah.
Yeah. On the altcoin side of things, I would be much more cautious because we basically wiped out a significant percentage of the ones who are willing to bid altcoins. So far, we've not seen any of the like super large market makers or like core relevant participants to market structure disappear or having blown up, but who probably have blown up are like a bunch of liquid funds, some of these delta neutral funds. So basically the ones who created a lot of spot buying pressure for altcoins. And right now it is to be seen who is going to replace that vacuum. So like I could very well see a scenario where the like altcoins that are outperforming are becoming even more selective, and the possibility of a large scale alt season is decreasing more and more. The one counter thesis I would say to that is if we see the sentiment growing that stocks and gold are going into like a total exuberance and like hype mode, that we just see crypto and altcoins specifically as kind of this final leg of the overall like everything bubble, and that kind of concluding the overall market cycle. But then again, what you alluded to earlier, Yuri, is that if we consider the fact that now in the US, and that is also something that Arthur Hayes covered in an essay, I think around a year ago, the US government is making up like a third or 40% of the global of a US GDP. So if you want to prevent a recession at all costs from a political perspective, it is very easy to do that. That's one part of like the coin. And the other side of the same coin is that with all these insane kind of circular investments of AI and chips companies and data center companies into each other, you create so much money flow and like an on paper growth of GDP if all of these investments are being followed through. And right now there's nothing that would like deter them from being executed. That on paper you will have a GDP growth. So technically it is unlikely to see a recession very soon. Is this going to play out the same way for the average like middle class retail consumer? Absolutely no. I think the asset economy is still going to benefit disproportionately. Living costs are going to increase. So I think the overall economic tension and like this, the whole like the economy is not real industrial complex, that thing is only going to grow. For Bitcoin, that is going to play out positively. For altcoins in the mid to long run, it is to be seen. But yeah, like did you guys change any of your positioning following the wipeout in on Friday or like over the past couple of days too?
No, I'm actually more convicted because I was my biggest position is Bitcoin at the moment. But yeah, just wanted to add to you that if people like ask me who want to like enter the industry, I also always indicate to Bitcoin because that's more or less for me. Obviously, no financial advice, but Bitcoin going to 1 million is like one of the biggest guarantees that you have in the capital markets right now, I would say, because it's a finished product. It works. And if you, if we look at what you just said with inflation is going up, with living expenses going up, Bitcoin just fits perfectly well into that. The other question is, okay, how much will the dollar be worth by then when it hits the 1 million price target? But yeah, just wanted to add that I totally agreed to that.
Is there
Or you wanted
any
to say something?
alt positions you guys are holding?
Just a little bit of Ether and Solana.
For me, it's the same. Most exposures through companies. I just wanted to share my screen real quick. Okay, I need to set the permissions here. I can do that. But in the meantime, so I think a lot of people have had decent trades when they got the notification of the 40-60% wick down. And I always get mad that I don't set up this once and for all, because every cycle we have these days where there's a ton of fear and FUD and people are selling and the price goes down 50-60% in a couple of minutes. I think there's no scenario, at least for Bitcoin and ETH, where it wasn't a profitable trade to buy the 50-60% dip. Like, I'd need to look it up, but like that's the easiest trade of the cycle. And it's like a quick 30-40%. And if you have size, that can make or break your year almost. So I need to get better at that.
It didn't go down 30 or 40%. It was like other altcoins that wick down that much. And the order books being that empty, like very, very few of the orders that were placed down there actually got filled. So the likelihood to have
Or let me give you another example.
Is very low.
Another example is the Ethena stuff, right? Like if you have high conviction and you see that USDE Depeg to 60 cents or whatever it was, right? I think like those type of days are obviously high risk, but again, if you have conviction on the mechanism, it's a decent risk to take for like a quick 30-40% performance. I don't know how much ETH dropped exactly or Solana, but I feel like the bounce after the drop was around 20-30%, but I might be wrong.
One thing I wanted to mention also, because that's another statistic I look at, because again there was like so much leverage in the market, and just measuring it in percentages, how much we went up or down. I think we need to look at more data to elaborate on that. And I think for me, one of the strongest signals is a very straightforward and almost crypto boomer take, is like looking at how much liquidity is locked in each chains. And if we look at the TBL and the entire DeFi market, nothing much happened essentially. So if we look at all DeFi combined, we are sitting at $153 billion in DeFi. That's like an insane number. We went a little bit down from 172, but a lot of that is also due to assets losing in value. For example, ETH went down, therefore also TBL went down, but we see like how many stable coins are on chain, and a lot of these stable coins remained on chain, the most biggest portion of them. So I think this also demonstrates the conviction into where we are at in this rally much better than some over leveraging collapses. And also, this is where we'll close it. If you look at the DATs, there's also more liquidity coming in than leaving at it. There's a very nice statistic on DeFi Llama about that. Can highly recommend that.
Max, can you open the link that I just shared? Because I can't even restart because my file is uploading in the background. I'll fix it next time. Can you share the link? You're muted.
The bull market peak signals, or which one?
Yeah, that one first.
Your favorite statistic.
It's one of my favorite sites. It's like, I mean, come on, like at least one of them has to indicate peak, right? Like none of the 30 signals here indicate that we've hit peak. So either we have to acknowledge the fact that the 4-year cycle as we knew it is dead, and none of these signals make sense anymore, or we have to adjust them, or we didn't hit the peak yet. And I just think it's much more likely that we didn't hit the peak yet. It's not rocket science. It's just like, I think the fact that this is like all of these indicators break is much less likely than like that being the case.
No.
How many? Like what? Sorry, what indicator are you looking at the most? Like which one do you think is the most relevant of all of these, Ono?
My favorite one is MVRV Z score. And then if you scroll a little bit down, I also look at NUPL, the net unrealized profit and loss, and our hodl I look at as well. I mean, yeah, like the Pi index, which is more on top, is a funny one, but that's also pretty accurate. Yeah, but I think MVRV and NUPL are the two I look at the most.
Well, I think what we all need to acknowledge is that the constellation of big market participants has certainly changed over the past 24 months. Like to expect this cycle to play out the exact same way is extremely unlikely, especially if you look at these indicators that are multiple based. For example, like the 2-year moving average multiplier. For us to hit 390K this cycle is, I would say, rather unlikely. Some other ones I think are more like adjusting to just like an overall growth of the Bitcoin market cap and Bitcoin price, and is not referencing prior multiples, because like you're not going to grow a 100 billion asset the same way that you are now able to grow I think 2 trillion asset. Like the multiples are not going to be the same if you look at market depth, etc. Like we are not going to see a 20x or 30x Bitcoin cycle bottom to Bitcoin cycle high price increase. It's extremely unlikely to happen unless we see like a major dollar inflation spiral, which right now is not really on the horizon, because the dollar is the only instrument that all the people are kind of taking refuge in and investing into other assets compared to other fiat currencies. I think the Pi cycle indicator is much more realistic. I mean, we've discussed our cycle targets at length in the past episodes. I think that most of us are ranging somewhere between like 140 to 200K. Everything above 200K would be very surprising to the upside. But yeah, like I agree with the overall sentiment that this crypto cycle is not over. I think in terms of picking altcoins, and like with altcoins, I would exclude Ethereum and Solana, because like BTC, ETH, and Sol, these three are like the majors for me. And like you can start talking about altcoins when you think about hyperliquid, etc. For these, I would even stronger now focus on the kind of revenue meta, which still sounds very silly that our industry has taken years to consider revenue and like making money a relevant metric to pick altcoins. But I think on the DeFi side of things, I think it's proven very resilient also through the crash of last Friday, that most of these mechanisms are working very well. We have seen much more unforeseen and unexpected things happen on centralized exchanges than we've seen happen on chain. Like the auto deleveraging that happened on Hyperliquid, I mean, it's a very like reasonable mechanism to implement, and that was nothing unexpected. That was transparent to look up beforehand. The self-referential oracles on Binance. So basically, what happened there is that since Binance is the most liquid exchange for many tokens, they occasionally use themselves as the price oracle for a given asset. And that led to Depegs of, I think, B-Sol, which is like some Sol derivative, USDE. So that was Ethena, stablecoin, and some other asset. And Ethena, so USDE on Curve, on chain, which is the most liquid venue, it only depegged briefly to 99.7 cents, so only 0.3%. So that was also a discussion I followed along during DAS London quite a bit, whether these synthetic stable coins and sort of tokenized stablecoin hedge fund-esque vehicles, whether they pose a tail risk or like a systemic risk for DeFi and the broader on-chain economy. And of course, they are more risky than, let's say, Circle or Tether, but some people started comparing them to the likes of Luna in last cycle, and I just think that's kind of off the charts. It doesn't make sense. These are completely different underlying mechanisms, and so far the redemption mechanisms have proven themselves resilient, and yeah, I don't see a huge reason to be systemically worried. But yeah, Yuri.
I just wanted to say something to what you have said in the beginning with regards to the revenue matter and altcoins. I think what a lot of people forget about is that how unprofitable this entire altcoin POS ecosystem is right now, and moreover like unsustainable. So was meeting last week with one of the leading minds in the POS ecosystem, leading one of the biggest operators, and we came to like a very straightforward agreement as that, especially also what Cosmos imagined about having a big ecosystem of hundreds of chains or even more, only works in an up-only bull market kind of a thing, because it's super, super expensive to run a chain. So we are talking about millions if you want to do it reliably and if you want to foster serious decentralization. I mean, like these server costs, especially if you want your operators on the chain to not run it in the regular regions. If you want to say, okay, we want to diversify a little bit, let's say to Asia, maybe also to South America, the costs for that are just skyrocketing. And I think this is like the underlying issue. I think we have way too much infrastructure, way too much, and it costs way too much to let it run. I think this is like the core issue. And if you look at all of the operators who are running out of dry powder, I think there's also like a more systemic risk of how we essentially designed this industry. Because if you look at all of the new chains that are coming up, yeah, very few launch with more than 10 operators.
But are the server costs the main expense of you as a validator, or is it headcount? Because like what the issue that I would be seeing is, given how many of these like longer tail proof of stake networks have basically gone down 95% or more over the past years, yet these validators are still employing a bunch of like BD people and just like trying to make some circular business with other validators, and it's like always the same people. Like, I mean, I imagine that to be way more expensive than the server costs.
It depends on how you look at it. So you have server costs, for example, on Walrus or Solana, and if you want to ensure high uptime on these networks, we are talking about thousands per month. If we're talking about Sui, Solana, Walrus, like the these are like big heavy ones. Of course, you could say, okay, let's consolidate like a couple of chains on one server or something. But if you want to do it the right way and to the right level of decentralization, if you really want to expand to other regions so that not everything is in the US and Finland, then it's getting relatively expensive. And of course, what you also want to do is you also want to have like the right people taking care of the nodes. So we are also talking about engineers, and I would also count engineers into like the operating infra cost, because someone needs to be there for alerts, updates, etc. And engineers, and if they are like the right ones, and if they are well educated ones, then you spend a considerable amount of money on that. And then to answer your question, yeah, we see more and more people getting laid off, but you also need a lot of people on your team just to be present, because if you want to launch on the newest chains, you also need to meet these clients in all of the conferences around the world. So you also need some BD activity. You can't just sit on your hands and wait until opportunities emerge. You also need, like every startup in the world, like essentially a sales department, if that makes sense. You could discuss if there are like a couple of heads too much from the previous cycle, but you need a considerable amount of people to do it seriously. If you ask
Yeah,
me.
no, I mean, I'm not denying that you need people to grow these things. I'm just saying that in most cases, I think they've proven rather unsustainable. First of all, because from a like investors and chain users perspective, nobody cares about decentralization anymore. And
Yeah.
with that, nobody is willing to pay these very high costs to validators anymore. I mean, if you look at some of the really big launches in the POS ecosystem over the past years, for example, Celestia, I mean, you could argue that a very significant share of downward sell pressure has come from validator staking rewards and them consistently selling their tokens. And just from an we have shifted from a developer and like idealist focused industry much more to an investor and like price asset management and trading focused industry over the past years. Like there's no way to deny that with all of these traditional finance and sort of serious money and institutional players entering the game. I also saw that during Dazzle, and like you now have all of these options desks, the custodians, like everybody institutionally focused here, institutionally focused there. With that, you bring in all the baggage of TradFi. And these people also have huge operating expenses because they spend gargantuous amounts of money on marketing, on BD, on like entertaining clients to dinners or other trips or conference expenses or whatnot. So I think we have definitely entered the era of just like a circular shift of capital around the industry. Much in contrast to the very like idealism, decentralization centric. Yeah.
Circular shift of capital is like the story of this industry. But I think we're mixing a few things up right now. So I agree with everything Yuri said on the operations. Like that's pretty much like there are chains that are quite expensive to run, Solana being one of them. There are chains that are more cost efficient. But I think the thing we just mixed up, or you just mixed up, Max, was validators selling commissions for providing infrastructure, I think, is not the sole issue here. In the delegated proof of stake system, it's the delegators who are staking and getting staking rewards who are selling, right? And I think especially in Celestia's case, that has been much more severe from a sell pressure perspective than just the infrastructure operators, who also contributed their fair share to the price pressure. But then the other thing is, I mean, let's be honest, it's like empty blocks and paying a ton for security. So what's the point? Like,
Yes.
why do we produce so many empty blocks and we pay so much for security? Like, that's just a design flaw, I think, that needs to be addressed.
Yes. And it's moreover like a supply and demand issue. Because if you look at Celestia's example, you have potentially a lot of supply for block space that people could use, but nobody wants to, like just very few people actually use it, build roll-ups and people interacting with the chain. That's one of the big issues here. The only chains where you could say they are revenue positive is Ethereum, of course, and Solana to a certain degree, but there's also still a lot of inflation going on. And if we ignore these two, maybe Hyperliquid probably, but then there isn't a single blockchain like POS, DPoS chain that is cash positive.
By the way, Max, I think you can stop sharing your screen or this one.
Oh, you're muted, Max, I think.
Man, what a chaotic episode.
If you look at the ultrasound money.eth, yeah, we've been inflationary for the vast majority of this year again. So you could argue that, I mean, even ETH is not deflationary anymore, driven merely through on-chain activity. Like what I consider relevant or like that is worth foregoing the deflationary aspect of ETH is that they've significantly reduced gas fees on the main chain, and I personally always considered that a major bottleneck to more adoption of Ethereum. Like there, regardless of your size, there is no reason to pay double digits or triple digits of dollars for executing a transaction. There is no reason for that. And for some of these hyper idealistic decentralization maxi ETH devs to still argue against that, like I think that is a core issue of this entire industry. It's like, just because you don't care about money doesn't mean that the other 8 billion people of this world don't care about money. And it's like $1 or $2 for billions of people is like their daily income. They are not willing to ever spend this on gas fees. This is just, it's like, I've never understood how people were willing to overlook that. But yeah, I think the whole POS economics are a totally different breed.
Maybe to add some perspective to that point though. If you're forced to, it doesn't work. Like if you're forced to pay double digits or even like 3 digits on fees, it's a massive problem, right? But if you choose to, because of the trade-offs you're making with regards to execution speed and settlement, with regards to size, I think then it doesn't matter, right? Like then it's fine. I mean, similarly how Bitcoin doesn't need smart contracts, Bitcoin doesn't need to be fancy. Bitcoin is perfect as is. And I can decide to use Bitcoin for certain use cases, and for other use cases, I may decide to use Ethereum. So in that sense, like, yeah, if you're buying a coffee and you're paying 3-digit fees, obviously it doesn't make any sense. But if you're sending $1 billion and you want to pay 3 digits, I think no one cares.
Yeah, but the amount of people who are sending $1 billion is very low. And I think ETH also as an investment and as an asset would have done way better.
What do you mean?
If they had focused on scaling the L1 instead of focusing on an L2 centric ecosystem. Because
I'm not sure.
Well, it definitely diluted the structural bid for ETH as an asset, because now you had all of these L2 coins that are still trading in the billions of FDV, and you didn't have like 1 or 2 of them, you had like 10 of them at the peak. So that definitely took away like a significant portion of the marginal bid for ETH and kind of the unification of ETH as an ecosystem. Also, like this weekend, I was cleaning up some old EVM wallets that I used years ago for airdrop sibling, and where I still had like dust lying around on all of these L2s. And it's just like, it is an insult towards the scarcity of human life to spend hours having to like conduct all of these dozens of individual transactions, wait 7 days for stuff to like settle to the main layer. I think if you compare that to the average Solana UX, like it's worlds in difference. Like before that, like throughout this year, basically I only interacted on ETH mainnet on Base and on like Hyperliquid EVM and Solana. But I never really had to bridge between any of those because I had funds on all of them. But now if you're starting to clean up like old dust on Optimism, on like Polygon, on Sonic, Avalanche, etc., like all of this stupid bridging around, it is so annoying. Like we are on that, like on the super on-chain native interaction side of things, we are still far away from competing with the fintech and like mobile finance and mobile banking side of things. Most regional banks in Germany have a mobile app that is more usable than Ethereum L2 bridges.
So on the one hand, you're right, but I think from a practical standpoint, it's much easier to incentivize people to build L2s, giving exposure to teams to their own ecosystem token and whatnot. So I think like that's always been the big challenge for existing established networks. You either go down the grant route where you dilute your treasury to death and give USD based grants with your native token, which means no one's ever going to make it. Or you go for an L2 approach that at least like psychologically, I think like it creates a much bigger incentive for founders to go that route and make it, so to speak. But I hear your point. I think from an ETH value capture perspective, it probably is correct in the short term. But in the long term, if you just want to build the biggest ecosystem in the world, I'm not sure. Like I think the battle hasn't, like I think it isn't decided yet whether this has been the correct or wrong approach.
Well, I mean, it definitely resurfaces the question of whether ETH is able to sustain a multi-hundred billion valuation from a cash flow perspective rather than a pure, like, it's a network asset perspective. Like, connected to that question is the other debate, which is how much value of blockchain tech being integrated into payment rails, banking rails, fintech rails is actually going to be captured by on-chain and like crypto native projects versus to what extent are banks, fintechs just able to implement the technology? Because most of the stuff is open source anyway and capture the value themselves. I mean, they are the ones who have the existing distribution and we do not. I do not think that all the banks are going to be able to like do that in time because they have like all the corporate slack, etc., and they are very slow to move. So there are certainly going to be certain niches or like certain offerings, like maybe some B2B integrations, where most of the value is going to be captured by crypto native projects. But also in terms of like, is JP Morgan, is Barclays, is Bank of America, are these Wells Fargo, or like are they going to replace as the like focal point of contact towards the end consumer? I don't know. I think that is yet to be seen. Like that was another observation I made during DAS, is that like, we are, from an institutional adoption perspective, at a better point than ever before. Like, there is no way blockchain and crypto as a technology is going to disappear again. I think, first of all, like the whole payments integration makes it kind of inevitable. We've reached a point of no return. It's not going to go away again. And I think we will see a similar development in terms of like decentralized identity and like human verification when the whole, how do we deal with AI on a like technological, philosophical, and regulatory level. I think that will come in 2 to 3 years roughly. And it will come very fast. And I think blockchain is kind of it's the only viable solution to that. So like this technology, it is not going to disappear. But what I am somewhat concerned about is that, are we as like the crypto industry, are we going to remain? And are we going to survive? Like as Yuri, as you pointed out beforehand, like most of the economic models, unless you are a stable coin, an exchange, or like an layer 1 or layer 2 foundation, which holds 10, 20, 30% of a supply of a multi-billion FTV coin, like it is very competitive to make money in this industry. Like most of the economic models in this industry are still flawed. And we cannot pretend as if cash flows don't matter going forward, especially if we have serious money at the brink of entering this industry. And these serious people I mean, I'm not necessarily saying that all of them are super sophisticated in their allocation decision, because many of them are like lagging behind, just following consensus, etc. But like, they are not going to allocate into most DeFi coins. They're not going to allocate into any L2 coins. They're not going to allocate into most L1 coins, where the only narrative is that, oh yeah, you can stake the thing and collect staking rewards. Well, I mean, there's no ecosystem. And like you can raise as many DATs around that thing as you want. If it doesn't have any like burning mechanism or like any path to a cash flow positive like thing or company or like economic structure, there is not going to be an institutional bid. It's just not going to happen.
And can I add one thing to that? And also competition entered the race. Like 3 years ago, there was just crypto was the only nice shiny thing. But now we have AI. And the thing is that a lot of these AI businesses are much more profitable than I would say 90% of all of the crypto projects, because people tend to already use AI much more in the consumer section compared to crypto. So if you build a very nice AI tool and you connect it with a PayPal subscription or whatever, people use it. That's it. Works. And you are like cash positive. And as a VC, if I have the choice between investing into profitable AI startup versus into a Fugazi altcoin, don't ask twice.
Yeah, I think it's way easier to get, especially retail distribution on the AI side of things, also to distribute in the like smaller scale B2B kind of field if you just offer some semi-customized AI solutions to whatever tooling to existing businesses. It's more
That's
interesting.
everything.
Well, would you say that AI is outcompeting crypto in like risk reward and an upside on all perspectives?
So there is two perspectives here. If you're talking about AI as in building new models and building AI tooling, that's a separate category. But if you're talking about wrappers essentially around any experience and make that experience better with the use of AI, that's every app in the world which is going to do that. So I think then as an investor, and this is how I understood Yuri's comment, it's not about like AI. It's just about like, am I interested? Like, do I like the team? Am I interested in the niche and their thesis about their use case that they're building? It has nothing to do with AI. I expect any team, whether it's cooking or a health fitness experience, or it's a quant trading experience, I expect every team to utilize and leverage AI. But if you're talking about actually building novel tools or new models and train them, obviously that's a completely different ballpark and game, which only few people with access to resources can do. Then that's separate. But especially the former example, I think crypto has more, like at least crypto has a higher chance in being defensible here. Because again, every app out there is gonna have an AI wrapper version of that at some point. I think, the biggest risk when you can build everything within like between 1 and 5 days, let's say, is okay, like how do you make that experience actually defensible? And I think a community and a token are at least interesting approaches to making things like defensible, as opposed to just using AI, which in a couple of weeks there's going to be a better version of that AI.
I agree. Like I'll add another point to that later, but I think on the community and kind of community network aspect, you basically have a handful of to be taken serious communities in crypto, which is like Bitcoin maxis, and then the like broader ETH ecosystem. You have Solana, but they're like very yeets. You have Hyperliquid on the trader side, and you have like these deep in the weeds DeFi people who are like at the forefront of like game theory like mechanisms and like exploiting each other, whatever, yada yada. Everything else, like all the meme coin communities are like can't take them serious. XRP people, Cardano people, like these are not serious individuals. They do not constitute like any any innovative force or any innovative power. They're like the bottom feeders of consumerism. So like they are relevant to consumer focused brands also in the age of AI. And I mean that share in the broader population of like consumerism bottom feeders, both in terms of like IQ behavior and like spending habits and all of these things, this is only going to grow. Like the whole, like the share of the kind of AI goober class is going to grow exponentially. I have a very good friend of mine who's really deep into philosophizing about all of these things and like AI versus blockchain and how to deal with that. I think we should get him on the show because like this is an interesting like side quest we've been rambling about now for the past 10 minutes.
There's a couple. It's interesting enough to ramble for 5 minutes more, I would say. We should definitely get him on the show and have him explore that. But I think most people, when they think about AI, think about the direct implication, right? So essentially they think about, oh, like I have an app or a DApp and AI is going to make it better because there's some notion of automatic decision making or proposing about a path or whatever. When I do a swap into an asset, that could be kind of how that resolves, or it could even be like finding that asset and discovering it in the first place with the use of AI. That's one aspect of it. The no-brainer aspect is kind of using AI to build or like enhance building these applications in the first place, which also introduces risks. But I think that should definitely speed up the process, and hopefully we're seeing more applications in general faster. But then I think the most interesting philosophical aspect is actually, if you think about like the authenticity or the integrity of any piece of data in the era of AI, right? And think about like things like deepfake, where I mean, we have enough content out there, the three of us, that would allow anyone to build a deep fake of us, right? So in the era of that, how do you know that I approve of a certain thing? And this is exactly what crypto solves. Because if I, with the register or an address or whatever you want to call it that is attached to my name that I have associated with myself, whether it's like a .eth address or it's like a wallet or whatever that looks like, if I approve of a message and I sign a transaction on a ledger, that is as close to proof as it gets, right? And I think that's the interesting part here, like the verification of the legitimacy of certain information in an era where anything could be fake or anything could be generated by AI. I think this type of conversation, the last one, so it's kind of like the philosophical one, is where AI meets crypto gets super interesting.
Yeah, no, I agree. I also think that
just one thing, yeah, that was actually also just one thing. It was exactly what you said was outlined in the narrative predictions, like of Messari Mainnet, not Messari Mainnet, sorry, of the Messari research paper, the outlooks for 2024. That was like one of the strongest cases back then. And yeah, I'm keen to figure it out also because the US has an interest in that, because they want to make sure that, for example, if you get an AI message, that you also make sure if the source code is really Washington DC and not Beijing, for example. So for these topics, blockchains are very, 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 very powerful to have a source of truth.
By the way, I want to look at the arena thing, Max, in a second, so maybe you can prepare to share that next. But just before that, I'm getting super weird calls from AI-generated bots that ask me to move the conversation to like WhatsApp or any other chat app. And it's so insanely good that my grandpa and my grandma would fall for it. That's also scary. Like, I think especially savvy users, I think, are pretty at risk of getting scammed by these AI things. And anyways, so this is another thing that I find super interesting. So if you assume that the killer app of crypto is the ability to price anything 24/7, I think the whole aspect of like buying and selling and swapping and trading assets is, very interesting and still one of the most interesting use cases of AI. And here's the project. It's called Alpha Arena. built on, I think, Hyperliquid, where different LLMs are competing against each other. And TLDR is they all started with 10K a few days ago. And as you can see, like DeepSeek is leading, um, followed by Grok 4. And then there's Claude Anthropic. And then there's Qwen 3. And then there's like just holding Bitcoin. And then the last two are ChatGPT 5 and Gemini. And I just love these type of projects, to be honest. I mean, everyone has to love this project. It's just like there's nothing not to love about this because it's transparent. The addresses are doxed, so you can actually look into the addresses and even copy trade them as the trades are happening in real time. But you can also look at the model chat and look at the sentiment and the rationale that these models have. Yeah, it's been pretty viral the last couple of days, but I understand why. I think it's like a super interesting. And by the way, like someone told me this a while ago, but apparently DeepSeek is built by a model of quants. So with that in mind, it's not surprising that they are currently the leading model. And by the way, performance is wild. Like 30 to 40% in just like 3 days is insane.
Well, I would be really curious to find out if these things would have been able to properly risk manage through a crash like we've seen on Friday 2 weeks ago.
I mean, I would make the prediction that we're going to see at least 20 copycats of this thing. So I think there's no way we're not going to find out during the next crash how these things behave and perform.
People who are tech savvy should kind of copy that and turn these into the Hyperliquid vaults where you can follow along. Like that could be a really easy way to extract a bit of money.
I mean, look, there's basically, you know how like there's been a time where everyone was like, just buy an ETF, like don't try to pick stock unless you are like some expert and have an edge. But like then that's your profession, so you don't need to listen to any advice anyways. You just like create it. But I think with trading, it's similar. Like the reason why I hate trading, I hate trading for two reasons. One, tax-wise, it's a nightmare, especially in Germany. It's like so disadvantageous to trade. I just like freaking hold or like have it in equities in companies. And then the other thing is, I mean, I'm not even good at it. Like what's my decision-making process? I think like looking at charts and TA is completely stupid. Like that only works because there's a set of tools who do the exact same thing until it doesn't work anymore because of like some macro event. So I don't believe in that at all. So I want something like this where there's a proven history, there's a proven record. Maybe there's like some sort of preferences even. And then I'm comfortable like putting money behind it because I'm like, okay, like whatever the return is, whether it's like 20% or 5% or 25%, I just want to do the exact same thing, not even copy trade, like have exposure to the vault, and I'm going to be happy with it, right? And yes, like if you are 1% of the best traders in the world, this may not make sense to you. But like I think for 99.999% of the people, this will make a lot of sense. But it's also dangerous because it's dangerous for the same reason why ETFs are dangerous. They are passive capital allocation. And when you have passive capital
allocation... This is not passive capital allocation at all. These things are active trading.
Sense that without individual decision making, there is like it's the same with an ETF. It's like there's an algorithm or a mechanism that just deploys capital and just deploys capital and just deploys capital, right? I mean, this is better than an ETF because an ETF is buy only, so to speak. But this at least goes both ways. It can also short. So I think this is much more interesting. But what's dangerous is, yeah, like imagine 8 billion people following the exact same thing. And there's like no debate anymore. There's no critical thinking anymore. I mean, obviously that's super dangerous.
Imagine everybody making money.
Up only tech. That's what we want.
I think the development of counterparty vaults like HLP or for lighter the LLM vault in the age of these things becoming a little more adopted is going to be very interesting to monitor.
I mean, look, I've sent this to a couple friends, and the reactions were very different, right? Like some reactions were, oh, like there's always going to be humans trading, and like some quants will outperform these. And I'm like, of course, but that doesn't invalidate the case. Like, think of how many bad traders there are. And then think about like how intransparent the process of picking a fund is even. Like even like picking a managed fund and looking at past performance. What is the management fee structure of that fund? It's such a nightmare. Like if you are a special financial institution, you get better rates even, better fee structures and all that bullshit. So, in the era of agents trading for you with a set strategy, that is kind of that's going to be the differentiator, right? Like the differentiator is going to be like some of these agents are going to perform better or worse in certain market situations and in certain times. And I think like that is probably still the decision you can make. Although on the other hand, that could be another agent in itself. I don't know. I'm happy this thing happens because I hate trading. I don't want to spend any time trading. It's like it doesn't have any value to society. It's just like gambling, basically, with informed data, of course. So you can definitely make money, but it's I'd much rather use something like this. So I really love this project. Sorry, I'm yapping, but like I love this project.
No, all good. I think it's an interesting addition to the discussion because, I mean, the comment I made previously, imagine everybody making money, that was only meant partly sarcastically. Like, who's in the long run going to be the counterparty of these things? And if you just look at the rules and the structure of the financial system and the asset economy at large, it was always based around being very unequally distributed and exactly not everybody making money. And now we are at a stage where we actually have the technical ability to almost perfectly democratize access to financial markets. So I think it's going to be very interesting to see how it will play out. I do not necessarily think it will play out in any like egalitarian manner, or if it is egalitarian in its outcomes, I think that the inputs will be deeply unsustainable. Like it's basically, imagine everybody putting their retirement funds into these things, and you basically have like an infinite money printer to subsidize an infinite bid on like infinitely silly assets, and this will kind of result in a UBI like structure or whatever. But yeah, I actually think we should do a deep dive on that because it's an interesting topic, and it's also a little bit out of the scope of the day-to-day, very time-critical crypto stuff. So like that is something we can rewatch and re-listen in a couple of years.
I don't know. You're calling Doge and Ripple stupid assets makes me bearish, but you should DM the founder of this, Max.
I think I should.
Please do.
Nice. Any other topics you guys would like to discuss?
I think we got everything covered. Back into the trenches, I would say.
Sounds good to me. All right. Was great having you guys on, and thanks everybody for watching, and see you next week.
See you next week. Thank you for having me again.
Ciao, ciao.
See you guys.